Mining.com.au is coming to you once again from the RIU Explorers Conference, which is currently underway in Fremantle. Standing next to me is the Senior Commodity Strategist for ANZ Group, Daniel Hynes. Daniel, it's a pleasure to meet you. How are you?
I'm great, thank you. Great to be here.
Now, I am super excited about today's chat because we're going to talk about all nerdy things. But one thing I wouldn't mind sort of elaborating on, and I know this is part of your presentation that you're giving here at RIU, is you're talking about the impacts of US policy on commodity markets. Can you elaborate on what your thesis is here?
Yeah, look, at the moment we're seeing a huge disturbance, I think, across the commodity landscape because of these measures or restraints that the US government, but even broader than that globally, are putting in place now. I mean, obviously directed by concerns around national security and the like, but in a sense, these issues or these measures that they're putting in place are causing tightness across the market in spots where we would never expect. So, for example, in the copper market, there's been this threat of US tariffs being placed on refined metal. Now, they threatened that last year, ended up only doing it on sort of semi-processed products, but that concern is still hanging around, and as a result there's a huge amount of copper being sucked into the US. Now it's sort of become like a strategic stockpile in a sense that it's really making the amount of available metal outside of the US to the rest of the market unavailable, and as a consequence the market is actually performing as if it's a lot tighter than it actually is at the moment.
So essentially it's having an impact on price discovery.
Yeah, absolutely, yeah. And I think that's something that the market sort of had bouts of in the past. We've seen episodes where Indonesia, for example, has put export bans on. We've seen some tariffs, small amounts, in Europe and the like as well. But this is a major issue which I think the markets are going to have to get their head around now. I don't think it's going to be something which will just pass by. It's going to be something which is going to be essentially embedded into the market for some time to come.
I wouldn't mind shifting our focus to AI and the impact it's having on commodities. Now, I know US GDP was quite elevated recently, and there's an argument to be made that it's been AI driven. Is that what you're seeing?
Well, certainly from the commodity perspective, the rates of growth in demand from this sector are astronomical, and it's clearly offsetting some of the weakness that we're seeing in more traditional markets, construction. I mean, you only have to look at China, the housing or property issues there. That's really slowed down quite considerably, but their growth rates in demand for metals like copper are double digit at the moment. And the same in the US. The US actually had fairly stable or unchanged sort of copper demand for the last decade. It's now started to rise between 5 and 10% over the past couple of years. So we're seeing this real huge sort of lift in demand from that sector. But it's a bit disingenuous to say it's just AI. It's more the electrification of the global economy. So it's everything from electric vehicles to obviously data centers and artificial intelligence and all of that in between.
So it's not a short-term impact. It sounds like it could have a long-term impact on commodities for some time.
Well, when I look at the rollout of data centers, the US is the centre or the hub, the global hub of that. It's doubling over the next decade. So that investment is going to be can continue for the foreseeable future, really.
Now, I know at this conference, and probably really for the last 6 months, gold has absolutely taken up all of the oxygen in the metal space, but I believe you started your career out around the nickel markets. Now, is there anything around nickel that you're watching in particular right now that maybe other people aren't paying attention to?
Yeah, a bit of an unloved metal, unfortunately, with the collapse in price we've seen, but not for me, And look, I'm seeing signs now that things could start to turn around, and that's really driven by Indonesia and its shift, I suppose, in how it attracts investment into the industry. It previously sort of opened the doors up and allowed as much to come through as possible. It's now obviously concerned about what the price is doing to its industry, and so we're seeing it start to restrict mining activity in the country as a result. And look, that could enable a bit of support back into the market. They're essentially taking a bit of a playbook from OPEC itself. The metal or the resource is maybe worth more in the ground than it is out, and so just tightening up supply a little bit could actually benefit them, their country, and the industry a lot more.
Now, embarrassing plug time for you. You write a daily market update. For anybody who wants to keep in touch with what's happening in the commodities markets, where can they find you?
Yeah, LinkedIn and Substack as well, actually. So get on board that. I talk about anything that's commodity related, short and sharp. Really good source to see what is moving markets at the moment.
It certainly is, and for everybody watching, I will put links to access those products from Daniel Hynes below this video.